What's going on, traders? A few things to talk about. It's going to be a quick warning video. I just want to get you guys prepared for this upcoming trading week. We're just going to get straight into it. So right now, we're looking at the ES daily time frame. And one thing I pretty much warned you guys about that was really bothering me is how we closed on Friday, this past Friday. It was very reminiscent of the Friday prior, which was February 28th. This was where everybody was getting excited. We got like a nice little pump towards close that Friday. And I put out a video letting everyone know that I think this is a trap. I don't think this is a real move. I don't think this is a momentum move towards the upside. I think this is an absolute trap. One of the key reasons is where we closed, right? We closed below some serious resistance here, right about here, right? We closed below some pretty serious resistance here. And and this is why I want you guys to always pay attention to candles, right? I know it's kind of redundant just looking at candles or trying to catch, where the bulls are, where the bears are. But if you can get to that point in trading or even TA, right? You can see where bulls are and where bears are. So here, for example, let's bring this down a little bit. It's not wrong, but I'm just bringing it down to this area so we can focus here. So here, for example, if bulls wanted us to step up, and this was back at February 28th, if bulls were really stepping in, we would have broke above this level here around 59, 70, 59, 80, give or take. We'll just say 6K, our psych level, right? And so we're looking at the same scenario here. And this is what I was saying pretty much in our last video, but we were more focused on the SPY than the ES, which is if bulls wanted to step in, so let's go down here now. So our focus is here in this area. If these bulls really wanted to step in, they would have broke us above previous levels at around 5,800, which they failed to do. And so that is why I'm pretty uncomfortable with this previous Friday pump and why I was uncomfortable with the following Friday's pumps towards the upside. Now, I can't say for sure what's going to happen tomorrow. This can easily be a bear trap, right? It's still early. It's still really, really early, after hours, pre-market, whatever you want to call it. So we can easily, just rip back towards the upside. We are holding a key level here at around 57.30. But if we manage to break below this, and this is the part where I want to get through to you guys, right? If we break below these guys right here, so you got bulls here, right? You got bulls here, right? Some serious, serious support in this area here, but you are below the 200 MA. If you break below 5,700, you enter negative gamma territory again, right? Not only that, but you're looking at this gap fill at around 5640. Pretty serious area. So let's bring it down here now. Okay, let's focus on this area here. 5640 is where your gap fill is. And so one pattern that I want you guys to pay attention to is what we've been doing for the past 3 weeks. So just try to bear with me here. Just try to keep up with me here. So what we keep doing, right? This is what we keep doing. We'll consolidate above a key level, break it. Retest that key level, break the next key level, right? So here, for example, we'll break the next key level, retest it, break down again. So we keep doing that over and over and over. We keep doing that same pattern, even back up here, same exact scenario. You you consolidate above a key level, you break it, you retest, you break it again. It's been happening over and over. So every time we retest, it turns into a bull trap. Bears step in, liquidate the crap out of bulls. We do it all over again, right? So hopefully we're picking up on that. And if you didn't pick up on that, hopefully you're noticing it now, right? So right now, again, if we break below 5730, we're heading towards 5700. After that, you're looking at a move towards this gap fill at 5640. Now, me personally, I think we're going to head much lower than that. Okay, this is just me. I could be wrong. This can change, obviously, with given news that we have this week. A lot of things can change, especially with the way our president has been talking about tariffs, doing tariffs, not doing tariffs. We don't know. Okay, but I think if we're going to keep repeating this pattern, and you guys know how I feel about gaps, they have very strong support and resistance, right? If we're going to keep repeating this pattern, we head towards this gap fill. Once we break below 5700, retest 5700, 5730, give or take, do it all over again. And then at that point, we get very illiquid and we start heading towards 5500s. Now, in our last two videos, we talked about how institutions were loading up on SPY puts, right? So this pretty much aligns with everything we're witnessing right now. Now, we didn't break down crazy yet. We haven't broken down key levels just yet when it comes to the NQ and ES. But if Bitcoin is the leading indicator, we can continue further down. If we're talking about being below the 200 MA, we can definitely head further down. right? Because what we saw was ES hold the 200 MA. Bulls stepped in very aggressive here. And so if we start giving up 5,700, these guys are going to get stopped out of their position and they're going to panic. And then you're going to see a crazy sell off to the downside all over again. So obviously, if you're bullish, you don't want to see that. Okay. So that's what I'm looking at right now. I think if we're going to continue to head down, your key level is 5730. After that, 5700. You're currently trying your best to hold 5730. Okay. Right here where these guys are. Right here where these guys are. Right here where these guys are. You break below this, these guys panic. You're heading towards that gap fill at 5640. You probably bounce, you retest, you do the same thing you've been saying here, here, and even here. And you do it all over again. And you get very illiquid once you break below this gap fill. Okay, you start breaking below gap fills, that's a problem. That's a massive problem. All right, so we don't want to see that. Obviously, if we're bullish, we don't want to see that. If you're bearish, you definitely want to see this happen. Okay, you get your Lamborghini ready, buddy. All right, so look at the NQ. All right, so looking at the NQ again, this is what I was talking about in our last video. We're below the 200 MA. Why are we talking about a rally of rip your face off rally? Right? Sure, SPY is above his 200 MA. ES was above his 200 MA. But when you're looking at everything else, besides the Dow Jones, of course, everything else that moves the tech side of the market is below the 200 MA. Semiconductor ETFs, Nvidia, so on and so forth. So it's very hard for me to be bullish or even start leaning bullish as long as we stay below this 200 MA, right? So when it comes to the NQ, obviously it goes without saying you want to hold 20,000. After that, you want to see us hold 19,800. This is your main level. Out of all levels, 19,800 is your key level. You fail to hold this, chances are you're heading towards 19,500. There is a slight gap fill here. Let me actually zoom in so you guys can see. There's a slight gap fill right here. Okay, little gap fill. You break below this gap fill at around 19,500, 19,480, give or take. Yeah, pack up. Go ahead, pack your bags, buddy. It's over with. Okay. It gets very, very domestic. Okay. So if you're wondering why my energy is low, it's not low. It's just I want you guys to understand the seriousness of the situation. When I put out two videos in one day, remember what happened last time I put out a second video in that one day? What happened the next day? All right. I'm just saying. Okay. I'm just saying. So we want to be careful here. Okay, we really want to be careful. I'm here to help. I'm here to. I just want everybody to succeed. Whether you hate me, whether you love me, I want everybody to succeed, and I want you to be prepared for tomorrow. Okay, a lot of these YouTubers are telling you rip your face off rally and all time highs, and this is the bottom and everything. I'm gonna give it to you raw, pause, major pause. I'm gonna be completely honest. Okay, I'm gonna always be honest and transparent as much as I possibly can when it comes to these charts. And right now, it's not looking good. Okay, not everybody can show you what institutions are doing when it comes to trading. So we want to be careful when it comes to the NQ. All right, 19,800 is your key level. Obviously, 20K is your key level as well, but 19,800 ultimate level of all levels. You're right below that. 19,500 is your gap fill. Okay, we're gonna be moving fast. Okay, we're gonna be moving very fast. Bitcoin. If you don't believe Bitcoin is a leading indicator by now, I don't know what to tell you because literally that last video I put out was before market even opened. And Bitcoin started tanking prior to that, prior to futures market opening, right? As soon as futures market opened, you gap down on the NQ and ES. So one thing I want you guys to acknowledge here, and I think I talked about this before, you go to the weekly time frame, and Bitcoin is having had a false breakout, right? It cannot stay above 100K. And I'm going to show you guys the same thing I showed you with Nvidia when it came to that 140. You go to the monthly time frame here, right? And this is how I became bearish on Bitcoin. I'm going to show you guys the same thing I showed you when it came to Nvidia going above 140 or trying to attempt to get above 140. This candle right here, we're going to start with this guy right here. Boom. That's your resistance, right? 99K, we'll just say 100K. Okay, so just keep it simple, round it up. Every time you got above 100K, bear stepped in. Here, looked good. Looked good, honestly, but immediately trapped. Absolute, just menacing trap. Bear stepped in. Bearish engulfing candle. All right. So every time you got above 100K or attempted to get above 100K, bears stepped in. This is the same scenario I showed you guys all the time when it came to Nvidia, and that is why I became bearish on Nvidia and started saying that Nvidia is heading towards the low 100s. Okay. So Bitcoin, when it comes to Bitcoin, it is doing the same thing. It had a false breakout. Let's go back to the weekly time frame, right? Let's zoom out. So right here. So you guys know I'm not making this stuff up. All the way back in 2021. This trend leads all the way back to 2021. We zoom in, tried to break out, you formed a top, you broke back below the trend line. You retested that monthly resistance, right? Tried to break above the trend line again, you failed. You got back below 100K, all right? You had a false breakout. Then you formed a double top, all right? This is not done playing out. I see a lot of traders saying this has played out already. I don't know where you guys are getting that idea. This is not even close to playing out, guys. You do the measured move for this, and you bring this measured move to the original breaking point. Come on, work with me. Yeah, 73K. So we're not there yet. Okay, we're not even there yet. Once we get here to 73K, we can start talking about some type of bounce. But even then, there's very much potential for a much lower move when it comes to Bitcoin. So again, if you don't believe Bitcoin or you never believe Bitcoin is a leading indicator, hopefully today changed your mind. Okay. All right. Hopefully today changed your mind. And so lastly, I want to just go over the VIX real quick and then I'm going to get you guys out of here. So one thing I talked about with someone in the Discord or one of the discourse in regards to the VIX is the way you know a bottom is near is when the VIX spikes, right? That's how you know a bottom is near. Historically, this has always been proven. When the VIX does stuff like this, that's when you know the bottom is near. Okay, right? So I just gave you guys the cheat codes. Okay, I gave you guys an extreme cheat code. VIX spikes right here. That's when you know the bottom is in. Okay. Anytime the VIX does a massive spike towards the upside, you have a short-term bottom coming soon. Okay, it's not gonna probably happen the next day or whatever, but anytime it does anything crazy like this, you have somewhat of a bottom coming. All right, this historically happens all the time. But what's interesting about the VIX is where it closed last week. This is not a good sign. So this weekly trend, every time the VIX got above this weekly trend, it rejected and it stayed below it. Last week, this past week, it closed above this trend for the first time. That's not a good sign. Not a good sign. Okay, not a good sign. Now, what we can see is maybe retest the 2019 area before heading higher. It's very much possible. But again, I mean, look back. You rejected here, I mean, multiple rejections. I'm not even going to go over every single one, but every time you attempted to get above this trend, you rejected. Okay, and you rejected really hard. I mean, even here, right? Rejected really, really hard. Okay, rejection here. So, what's important to note here is that the VIX is not spiking. Okay, it's just climbing. It's climbing like a regular stock. It's just climbing towards the upside over and over and over. Okay, it's slowly climbing towards the upside. It hasn't even spiked yet. When it spikes, then we can start talking about potentially looking at a bottom. It's amazing how many people doubt the VIX or call it like a crappy indicator. This just tells me you don't know what you're doing, if anything. You just don't know what you're doing. This thing is amazing. I mean, amazing. I mean, think about it. Remember when I was talking about how the VIX stay like anytime the VIX gets between 14 and 15, it bounces towards the upside or spikes towards the upside. We were right on the money with that. Every year, the VIX chooses a new range to trade within, and then when it gets within that range, so for example, last year, anytime the VIX got between about 13 and 12, it spiked towards the upside, right? This year, it's 15 and 14, right? This thing is an amazing indicator. It's crazy. It's an amazing indicator. The problem is a lot of you who complain about it, I should say, don't know how to, you pretty much TA it or, analyze the VIX or use it in correlation with the market. And that's fine. I'd rather you admit that than just act like this thing is trash. This thing is amazing. All right. This thing is a godsend when it comes to trading. So again, I mean, you close above this weekly trend. That's not a good sign. All right. Now, institutions did load up 50 strike calls on the VIX, but they weren't significant enough for me to go over. I'll go over them in another video if we start seeing more of that action. But so far, those 30 strike calls on the VIX are still in play, guys. Still in play. We haven't hit 30 just yet. We haven't even gotten above 30. And if we go down to the daily time frame, you're very illiquid all the way towards about 35. All right. So at some point in time, the VIX is going to want to get up here. When that happens, I don't know. Let's actually zoom out. It's right here. Okay. The VIX is going to want to get up here at some point, all the way up here. You have a massive, massive fair value gap all the way up here. That's actually past 30s, all right, all the way towards 38. So I don't know what's going to cause that. But one thing I can say is that Everyone sounded very bullish when it came to Jerome Powell, basically saying the market is fine, everything is okay Friday. That's not a good sign. Okay, that's not a good sign. When the Fed keeps saying we're not going to have rate cuts, I think we understand that there's tension between Donald Trump and the Fed, right? If the Fed keeps saying they're not going to do rate cuts, Donald Trump is going to do everything in his power to try to tank the market until the Fed decides to do rate cuts. And I think that's what's happening now. You don't have to believe me, research it yourself. But again, as long as the Fed keeps saying we're not going to do rate cuts, I do believe that's bearish. That's absolutely bearish. Why? Because our president wants the Fed to do rate cuts. So he's going to keep tanking the market. He's going to keep trying to tank the market or tank whatever until we get those rate cuts. So when Jerome Powell saying everything's okay, everything's fine, everything's booming, that's bearish. Okay, that's bearish. That's not a good sign. All right. So you guys let me know what you think in the comments below. Just want to give you guys a quick video. Be careful trading this week, at least the beginning of this week. It is not looking good. I would say pay attention to Bitcoin. If anything, if Bitcoin continues to tank, obviously, I think it goes without saying, everything else is probably going to tank in regards to the tech side of the market. All right. If you missed the last video I put out today, feel free to check that out. I went over semiconductor ETFs and Nvidia heading towards 100. And even the video before that, I went over institutions trading Nvidia 100 put. So definitely check that out. And again, let me know in the comments below what you think. Discord link is in the description below. We're going to go crazy this week. Once again, until the next video, traders, have a good one.